Hello and welcome to another episode of Your Retirement Planning Simplified. I'm Joe Curry, along with my co-host, as always, Lindsay Wilson. How are you, Lindsay?
I'm great, Joe. I'm going to put in a plug for a show I'm in. If you're in the Peterborough or GTA area, Jim Watts, Girl Reporter at Fourth Line Theatre in Millbrook, Ontario in August. Come out and see it. There's
Awesome.
my plug.
All right. So while we're plugging things, I'll plug. Today's been a long day of recording. Just did all of our first 4 YouTube videos, so we have some short videos, some longer videos coming out. So if you don't already know this, all of our podcasts are already on our YouTube channel, Retirement Planning Simplified, and so now we'll have some other more specific to like video content. So
Excellent.
with all
Yes.
that, we'll jump into our topic today. So today, Lindsay, I wanted to talk a little bit about this because I mean it's always in the news. People are always talking about it. People are always asking me about it, and that is cryptocurrency. Bitcoin being the most popular cryptocurrency. But I just thought maybe we could talk about where does cryptocurrency fit into like a retiree's investment portfolio. So yeah, that's our topic for today.
Great. So it's a topic that a lot of people are curious about but might not know much about. Can you start by telling us what cryptocurrency is, but in language that the average person could understand?
Sure. So I actually cheated on this question, Lindsay, and I got ChatGPT to just give me a layman's term explanation for cryptocurrency because it is kind of a complicated and new thing that I feel like a lot of people don't really understand what it is. So anyway, here's what ChatGPT tells us. Cryptocurrency is a type of digital or virtual money that you can use to buy things or send to other people. Unlike regular money, like dollars, for example, that you carry in your wallet or have in your bank account, cryptocurrency exists only online. It uses special technology called blockchain to keep track of the transactions and make sure everything is secure. Bitcoin is one of the most well known cryptocurrencies. You can think of it like internet money that you can use to make payments or store value, but is not controlled by a government or a bank. So that's the definition that we have from ChatGPT.
Okay. Well, I'm curious, why do you think people are excited about cryptocurrency?
Well, I think there's a few things. I mean, like anything that gets momentum and attention, it just kind of builds, right? So that's kind of the definition of momentum. So I think that's part of it. But there's a few things I think that have helped it, I guess, come to stay. So one of those things is decentralization. So I think there's a lot of maybe a lack of trust with governments and central banks from a lot of people, right? And so, unlike traditional money, cryptocurrencies aren't controlled by any single government or bank, right? So, for a lot of people, that's very appealing when they don't trust the financial systems that already exist. So that's one. I think another one that people talk a lot about now, and I would argue around this one because there's been some events out there some people might be familiar with where cryptocurrency has gone missing, so to speak. Exchanges have disappeared, but some people feel that security is a reason of why it makes sense to use cryptocurrencies. So they do have basically it is an advanced technology that keeps track of the any kind of transactions. So it's secure and it's private. So it's blockchain technology. Um, and so the idea is that it is transparent and that no one can tamper with the transactions, right? So there is that perceived security piece. And then global accessibility. So cryptocurrencies can be sent and received anywhere in the world. So they're useful for international transactions without the need for currency exchange or high transfer fees. And then there's the investment potential. And maybe I'll back up actually before I do the investment potential, and these are maybe kind of related. Um, but getting back to that trust piece with the financial system, a lot of people worry, well, what happens if the financial system collapses, right? And so this is could also be the decentralization piece could also help it have more of a store of value if something like that were to happen. And then the investment potentials. This is what a lot of people are excited about, and I mean, it's not really why it became somewhat mainstream, but I think it's why it has continued to gain a lot of attention is because you hear a lot of people making a lot of money investing in cryptocurrencies, right? So many people do see it as an investment opportunity. If we think about Bitcoin, for example, it's grown a lot, very significantly over the years. So, and a lot of people have made a lot of money with Bitcoin. A lot of people have also lost a lot of money, but um, and that's kind of what we're here to talk about, I guess, a bit today. Um, and what else? I guess the last thing that I'll put here is, it's kind of the innovation and the future potential for this technology. So cryptocurrencies and that blockchain technology we talked about are seen as groundbreaking. And people think that they could transform many industries by making transactions faster, cheaper, more efficient. So at the end of the day, people believe that cryptocurrencies are game changers because they have that potential to revolutionize the way we handle money, the way we conduct transactions, and even how we manage contracts and data. Um, so I think I've kind of hit on all the main points of what people are looking for from cryptocurrency.
So just bringing it back to our main point, is cryptocurrency a good option for people?
Okay, so this is kind of what we're trying to answer today, and I'm just going to kind of give some information around it, right? So the first thing I'm going to say is, our clients don't have cryptocurrency investments. At the end of the day, we just think they're too volatile. So I'm not going to make a blatant, yeah, they're a good investment, or no, they're not a good investment. But I want to put them in perspective to investments that I guess other people would be familiar with. So stocks, bonds, even cash, right? So the reason that we invest in stocks is because we're buying a share of a company that is making money, and we're expecting to participate in those future cash flows coming to that company. Right. So we're buying the stock to make money, and there is an expectation for future cash flow to come back to us. Now, bonds are a little bit different, but there's still the expectation of future cash flow. So if we buy a bond, essentially what's happening, Lindsay, it's like me giving you some money, and then you pay me interest to borrow that money, right? So it's like, I mean, everyone's familiar with a mortgage, right? The bank gives you money, you pay them interest. The bond's the opposite. It's like you give the bank money if they're putting out a bond, and then the bank pays you interest. That's what a bond is. So at the end of the day, what we're doing with a bond is loaning money so we can receive, again, future cash flow back, and it's in the form of that interest. So then we have cash. Cash is not an investment, but we need to have cash so we can go buy groceries, and we have a realistic prediction on kind of how much our money is going to be worth tomorrow, right? So being in stocks is not really helpful for buying groceries, because if I want to buy something tomorrow and all of a sudden the stock market's down, then I'm just guaranteeing my losses, right? So that's not ideal. So that's where cash comes in. So let's look at crypto and see how it compares to these assets I just talked about. So crypto, if we think about it, it has no future cash flow, right? There's no earnings, there's no interest being paid, no dividends. So that, like, there is no future cash flow. So from an investment standpoint, we're basically just relying 100% on supply and demand. And this is why I said I'm not going to say if it's a good or a bad investment, because I don't know what's going to happen. And the point is that nobody really knows. We can all have our predictions of what happens with the technology in the future, and where how it takes off. But at the end of the day, we don't know, and it's driven entirely by what the demand is for buying crypto. So, what are people willing to pay to buy crypto, and how much demand's there is going to drive how you do as an investment if you're investing in it, right? So it's not really ideal in the sense of our retirees who are not looking to get rich. Like, they've done good saving and they've sacrificed to get to a point where they can retire now. So now what we're trying to do is make sure they don't run out of money. And again, that Bitcoin is really not going to give us any kind of predictable returns to help them manage their cash flow into the future and see how much they can spend. Okay. Now, if someone's younger, is that to say that you should not buy crypto? Again, I'm not going to make a recommendation here, but maybe for a piece of your portfolio, just to I guess first I'd say recognize there's no guarantees there. I would say just as likely that you lose it as if you double it, triple it, or get rich off of it. But maybe it makes sense, and that's where your risk tolerance really comes in. But as a piece of the portfolio, but would never suggest putting a large portion of your portfolio or all of your portfolio in there. And if we think about it related to cash, so I talked about how people like the idea of this kind of like a currency that's not tied to any other financial institutions or governments or anything like that, and how companies might use crypto for transactions. So, in theory, that all sounds great. But if I bring it back, Lindsay, to the point where I talked about using cash to buy my groceries, it's not really a good substitute for currency in that sense because um, crypto is fluctuating way more than stocks.
Mm.
So again, if I want to go buy groceries tomorrow, I don't really want to spend my Bitcoin because I don't know what's going to happen to it tomorrow, right? It could be down 20%. And again, all of a sudden I'm having to take a loss there just because I want to buy groceries. So um, I think that's probably sums it up. But on the same hand, you're listening to this. Do you think we could go any further, any deeper? Did I answer that?
I think it's a good starting place. I mean, I can say that in the last, I would say, year, we did have one client, a retiree, who asked us about crypto and was curious about it. And I think that there is um, some validity in it and looking at it. So, yeah.
Yeah. So if we just kind of focus on it, like, is it a good investment for retirees? I would say, internally it's not something that we're considering just because we're looking for some more predictability.
Mhm.
And we know there's future cash flows, like I said, from those other types of investments. They've been around for well over 100 years. We know a lot about them, and it allows us to help our clients make good decisions around how much they can spend in retirement. And it's just, again, not to say that crypto won't take off and it wouldn't be a good investment. It's just, it makes it really hard to do good planning. And I don't think it's worth the risk for where our clients are at.
Thank you for joining us for this latest episode of Your Retirement Planning Simplified. Be sure to tune back in for the next episode. And until then, we're here to help you simplify and succeed in your retirement planning.